Welcome back to your daily pre-market brief for Tuesday, June 30th. Last trading session recap. Though Wall Street just snapped a brutal 5-day losing streak as a surprise, US-Iran ceasefire ignited a massive risk-on rally across global tech stocks. Equities staged a massive comeback on Monday as geopolitical tensions finally cooled, allowing oil prices to stabilize and funds to rotate aggressively back into the technology sector. The big tech surge was fueled even further by news out of South Korea, where Samsung and SK Hynix announced a $518 billion investment into a massive artificial intelligence chipmaking hub. We also saw major index shuffling with Alphabet officially replacing Verizon in the Dow Jones Industrial Average, sending telecom shares lower while communication services rallied. Overall, the combination of easing conflict in the Middle East and structural AI investments gave buyers the green light to step in and buy last week's dip. The indices, commodities, and general market mood. Starting with the major indices, the SPX closed up 1.2% at 7,440. The INDU gained 0.6% to close at 52,183. The COMP surged 2.1% to finish at 25,820. Looking at commodities and crypto, gold dropped 1.4% to 4,039. Brent crude climbed slightly by 1.8% to 74. Bitcoin rallied 1.1% to close at 60,337. Checking the fear and yield gauges, the 10-year Treasury yield remained completely flat at 4.37%. Meanwhile, the volatility index plummeted 4.1% to 17.65. Collectively, the massive drop in the VIX, combined with flat Treasury yields and surging equity benchmarks, signals a profound resurgence of institutional risk appetite. Capital is no longer hiding in defensive safe havens or gold, but rather actively buying the tech dip as geopolitical fears subside. The market is demonstrating a healthy technical rebound, absorbing last week's selling pressure and returning to aggressive forward-looking momentum. Top 5 gainers and losers, filtering out the penny stocks trading under $5. Top 5% gainers. QDEL surged 32% to close at 18.2. Shares exploded higher following reports that QDEL Ortho is evaluating the sale of its point-of-care testing business to private equity for roughly $1.5 billion. Investors cheered the potential capital injection as a direct path to reducing the company's massive debt burden. ASTC skyrocketed 31% to finish at 12.2. Astrotech shares ripped on news that its board has approved a potential sale process for its first detect trace detection subsidiary. The company is seeking to free up cash to focus heavily on its new lunar, resource, and space manufacturing initiatives. AGMB gained 29% to close at 17.8. Agomab Therapeutics caught a massive bid after releasing highly positive Phase 2 clinical data for its primary fibrosis pipeline candidate. The successful trial results have sparked immediate Wall Street chatter regarding potential partnership deals. OUST ripped 29% to settle at 54.1. Ouster announced a major strategic partnership with Field AI to integrate its native color digital LiDAR into general-purpose industrial robots. The stock was further boosted by news that the company successfully completed a massive traffic deployment project in New Jersey ahead of the World Cup. AIIO jumped 26%, closing at 5.5. RoboAI shares caught heavy retail momentum following the official unveiling of their new enterprise generative model suite. Analysts highlighted the platform's unique capacity for seamless enterprise integration without massive overhead costs. Top 5% losers. EVMN crashed 40% to close at 15.1. EVMN shares were decimated after their Phase 2B trial for severe chronic hives completely missed its primary endpoint. The lack of efficacy at week 12 forced management to officially halt further development of the drug for this specific indication. STE dropped 22% to close at 9.6. Solidian Technology faced heavy selling pressure after filing a dilutive mixed securities shelf offering. Shareholders aggressively dumped the stock on fears of incoming equity dilution, suppressing the near-term valuation. EAF fell 20% to finish at 5.8. GrafTech International sold off sharply after management issued downside guidance for the upcoming quarter. The company cited a rapid softening in global steel demand and severe pricing pressure on their core graphite electrode products. BLD declined 15% to close at 359.8. Top Build cratered after missing consensus revenue estimates during their quarterly earnings call. The company blamed the miss on a rapid and unexpected freeze in new residential construction projects. SNEX tumbled 14%, settling at 115.9. StoneX Group faced a harsh reality check after reporting severe margin compression across its brokerage units. A lighter than expected trading volume environment significantly kneecapped their quarterly revenue generation. Top 5 institutional whale trades. TSLA. The 420 strike put expiring in 0 days with 15,118 volume and an open interest of 15,118 for a ratio of 1:1. CART. The 43 strike put expiring in 25 days with 8,174 volume and an open interest of 8,174 for a ratio of 1:1. BHP. The 30 strike call expiring in 57 days with 4,600 volume and an open interest of 4,600 for a ratio of 1:1. GDS. The 35 strike call expiring in 172 days with 3,454 volume and an open interest of 3,454 for a ratio of 1:1. TSLA. The 520 strike call expiring in 39 days with 3,165 volume and an open interest of 3,165 for a ratio of 1:1. These institutional block trades reveal a highly tactical options environment as smart money balances rapid directional momentum with cautious hedging. The massive 0-day put volume on TSLA, right near the money, suggests aggressive intraday hedging or a short-term volatility anomaly playing off the tech rebound. Conversely, the deep in the money calls on BHP highlight strategic position rolling, where institutions are locking in equity exposure for the next 2 months without tying up capital in shares. The longer-dated calls on GDS point to confident out-of-the-money momentum bets, showing that whales are still willing to take calculated risks on future upside breakouts. To find more whale option trades, try our massive option scanner for free at GLS Equity. Come next trading session preview. Looking ahead to Tuesday's session, the primary focus will be on the morning release of the US Consumer Confidence Report and the JOLTS job openings data. Wall Street is desperately looking for any signs of a cooling labour market to gauge whether Fed Chair Kevin Warsh will maintain a hawkish stance into the fall. Because this coming Saturday is July 4th, the US stock market will be closed this Friday for the Independence Day holiday. This shortened trading week means liquidity will dry up fast, and the highly anticipated non-farm payrolls report has been moved forward to Thursday morning. Expect massive volatility on Thursday as traders rush to position themselves around the jobs data before the long 3-day weekend. Next session, earnings schedule. After the closing bell on Tuesday, the market will be laser-focused on earnings from NKE, STZ, and PRGS. Investors will scrutinize Nike to see if their profit margins and China demand are recovering amid a broader consumer spending slowdown. Constellation Brands will be a critical gauge for consumer staples resilience, as Wall Street wants to see if they can maintain pricing power and beer depletion volumes without alienating budget-conscious buyers. That covers your market brief for today. If you found this breakdown helpful, make sure to hit that like button and subscribe so you don't miss tomorrow's pre-market briefing. Trade safe, manage your risk, and I'll see you in the next one.